The Agweek Market Wrap is sponsored by Gateway Building Systems.
Welcome to the Agweek Market Wrap, brought to you by Gateway Building Systems. I'm Don Wick here on the Red River Farm Network. We're joined, as always, by Randy Martinson of Martinson Ag Risk Management. And Randy, at the end of the week, we saw USDA out with their supply-demand numbers. It didn't seem like the trade played with those very long, but give me your take. What did you see in that report from USDA?
Yeah, you're right. I mean, one thing, it gave some guys an opportunity to day trade soybeans here pretty good with the whipsaw that we saw. But yeah, it came in kind of what I was thinking it would be, and that was it was neutral to a little friendly to the wheat market. It was friendly to corn. To me, it looked like it was bearish soybeans. Market opened up and pushed the beans down pretty good to start with. But, it did, like you said, it didn't take very long for the market to flip away from trading the report and then go back to weather. And we slowly started to see things gain back, especially the soybeans, which was impressive to see them come back from the losses to finish with some small gains. And corn also finishing with a little bit of strength.
And wheat, it's obvious we still have plenty of wheat in the world.
We do, and there's a couple of negatives with wheat going on right now. You're right. I mean, our exports really, we can't seem to get that going, even with taking one of the largest producers out of the export market. But they are now starting to see, actually today was one of the first boats leaving Ukraine of wheat. And I think that kind of stung the wheat market a little bit more because now you've got another supplier out there.
You talk about things moving out of the Ukraine. This past week, we saw that first shipment out of that corridor where they're able to move some product out. It was corn. Lebanon was the first one out. I guess maybe just over this past week or so, but they rejected that shipment because that corn was out of condition after sitting in the docks for that long. Is that an indication of what's still to come? Because there's a dozen or plus ships still sitting in the port at Ukraine.
I think it is. I mean, can you imagine a bunch of grain sitting in a boat out in the water? It's likely they aren't exactly the tightest, so you'd expect there was some leakage and just even sitting in those conditions with that humidity or with that kind of air, that there's going to be some trouble. So I wouldn't be surprised that there's going to be some discounted product being sold around the world here in the next 30 days.
You talked about soybeans after this report. We certainly need some weather to help finish these beans out in many parts of the production belt. That's really what we move to here at the end of the week, at the end of this trading session, right?
It is. I mean, you're right. I mean, a lot of area needs one more drink just to finish the soybean crop off. And, you look at the weather that's going on in the southern plains, I mean, in the western corn belt, Nebraska, western Iowa. We look at what the drought monitor map showed us with the expanding drought in those areas. And I think it's going to be pretty interesting. That kind of led me to be surprised that USDA increased soybeans yield in this report.
Randy, USDA also did a resurvey of acres in North Dakota, Minnesota, and South Dakota. Was there anything in those numbers?
Well, there was. I mean, I was kind of surprised that we didn't see a decrease in corn acres up here in the Northern Plains because of how late we were planting. Looking at it, we saw 100,000 less wheat acres, but that was all cut from Durham. We didn't see any really much change. 100,000 less acres in Minnesota for corn, and then 300,000 less acres for soybeans. 200 in North Dakota, and I think South Dakota was another 100. So I was surprised that soybeans saw the biggest cut in the resurvey of acres.
Of course, we've got the Pro Farmer Tour coming up. Does the trade pay a lot of attention to that, particularly in a year like this when we're watching weather?
They will, because this will give them a chance to see boots on the ground and reports coming from certain areas. So it's certainly going to give a better perspective of what the potential crop is in certain areas. So I think the market will be watching it, kind of like what they watched the wheat quality tour that was up here in the spring wheat country, because they found a lot better crop than what was expected. Now we'll see if that follows through with when the combines start rolling here, which should likely be next week.
Yeah, we've seen a few rolling in the region already. I think some positive reports coming in on what we've seen thus far anyway, especially the way we started in our footprint. If I can switch gears over to the livestock side of things, we don't often talk about a weather market when we're talking cattle, but you look back to last year and that drought and all the herd liquidation that took place in the Dakotas, and now more of the same happening in the Southern Plains. When you have 2 years of this happening, that weather really is driving this cattle market, and it's got to have some long-term implications.
It does. I mean, and that's part of what's helping the fat cattle market stay strong. And we're seeing those deferred contracts trade up over 150 right now, close to 160. And you're exactly right. We're seeing a lot of herd reduction, a lot of cows coming to town. It's putting pressure on the market short term because we've got more supply of beef than what we anticipated. But it's certainly going to make the fourth quarter of 2022, the first and second quarter of 23, a lot show a lot less production as far as beef is concerned, which is really helping to support the market.
Do you think here in the Dakotas and Minnesota, where we had drought last year and there was some liquidation, that they've been able to build back some of those herds, or what
I
happened?
think a lot of them, I think a lot took the time off. There was some rebuilding, maybe some younger stock brought in to little less feed consumption with a younger cow than an older cow. I think a lot of them would gear up here now. We had a good, this year we're having a good feed year. I mean, we're seeing a lot of good hay, and we're rebuilding our feed stocks, and I think that will help bring some of the herd back into the western North Dakota here this fall.
Nice to have that grass. What about the dollar? It seems we've been following that pretty closely this week too.
It is, I mean, the dollar is I think we're going to finish a little lower for the week here. It's been one that's been kind of wild. Of course, we did see a little change as far as inflation is concerned this week. It took a little tick down. I think that kind of helped to come in, and, and with the price of fuel, gas being down a little bit, it's helping increase the disposable income and that's helping to increase the demand as far as the meat is concerned as well.
Anything else you're looking for as we go into a new market week, Randy?
We got the report behind us. Now we'll start looking at weather. The thing is, weather is going to start to become a little less important now as we get to the end of August. The crop's likely going to be made. The big thing now that we're going to be watching is, which I hate to say up here for us in the north, but it's when will that first frost date come?
Yeah, everybody's hoping for a good long September, that's for sure. Appreciate the chance to connect, Randy.
Yep, thank you.
Thanks to Randy Martinson, president of Martinson Ag Risk Management. Of course, for markets and market analysis throughout the week, you can tune into the Red River Farm Network or find our commentary online at rrfn.com. The Agweek Market Wrap is sponsored by Gateway Building Systems. I'm Don Wick.